Welcome back to Channel Name. Today we're diving into ConocoPhillips ticker COP, a major player in oil and gas. Can its stock soar to $1,000? We'll break down its strengths, weaknesses, financials, dividends, and future outlook. Plus, how does it stack up against market indices? Let's get started. ConocoPhillips is trading at around $97 today. To hit $1,000, it'd need a 930% jump, pushing its market cap over $1 trillion. That's a tall order for an oil company, given the cyclical nature of energy markets. Even with high oil prices, this seems unlikely in the next decade. But let's explore why COP is still worth watching. ConocoPhillips shines with its global operations, think Permian Basin, Norway, and LNG projects like Port Arthur. It generated $8.8 billion in free cash flow in 2024, fueling dividends and buybacks. Its 3.21% dividend yield is solid for income investors, but there are risks. Oil price swings hit hard, and its $773 million net debt in 2025 raises eyebrows. Unlike Exxon or Chevron, COP focuses solely on exploration and production, missing out on refining stability. Plus, environmental regulations could pressure future growth. COP's profit margin was 17.9% in 2024, competitive but below Exxon's 20-25%. Margins fluctuate with oil prices, peaking at 20% in 2022, dipping to 16.5% in 2023. Debt is $15 billion, with a manageable 0.35 debt-to-equity ratio. With $20 billion in operating cash flow, COP can cover its debt unless oil crashes below $50 a barrel. Side incomes like LNG fees and asset sales add liquidity but are small compared to oil revenue. Since its 1981 IPO, COP delivered an 8.5% annualized return, beating the S&P 500's 7.5%. But the past decade saw 90% returns, lagging the SP's 120% due to oil price crashes. Looking ahead, COP's investing $12 billion annually through 2030 in Permian and LNG. By 2040, it's eyeing natural gas and carbon capture to align with energy transitions. Socio-political risks like stricter emissions rules could hurt, but high oil demand and geopolitical tensions are tailwinds. COP's 3.21% dividend yield is juicy, with a 4.5% annual growth rate since 2018. It's not a dividend aristocrat due to a 2016 cut, but its 40% payout ratio is sustainable. Short-term, expect 8-12% returns if oil stays above $70. Long-term, 6-8% is realistic, but may trail the S&P 500's 10%. Compared to the XLE Energy Index, COP's low-cost assets give it an edge, but it's volatile against global indices like MSCI World. So, $1,000? Probably not anytime soon, but ConocoPhillips offers strong cash flow, dividends, and growth potential for energy investors. Weigh the oil price risks and ESG pressures before jumping in. What do you think about COP? Drop a comment, like, and subscribe for more stock breakdowns. See you next time.